David, welcome to the first video version of Software Daily.
I'm so honored. I feel like very special right now.
Well, it's much deserved. You are the host of one of my favorite podcasts, probably the most popular or second or third most popular business podcast.
We're working on it.
Right. So Acquired, if people haven't heard it. And we are in the midst of emerging from coronavirus hibernation. And I thought you would be a great first guest for the video podcast.
So great. Well, thank you. I'm so honored. I'm so excited. Like, we're back. It's
somehow
in person. It just feels, we were talking before we started, Ben and I, my co-host on Acquired, Ben and I, we haven't done a in-person recording in over 15 months. And God, I miss it. This is great.
I've had to shake off a lot of cobwebs, not just for podcasting, but literally for in-person interaction. Like going to dinner, I almost had to force. There was an atrophy that I had to overcome, like ordering in a restaurant and like hanging out with people. Or like playing basketball, like all these things.
Yep.
You know, there's a rebirth that's happening.
Totally. You know what's been hard for me in the last couple of weeks? Hard. It's been awesome. Is consuming alcohol again, because I'm going out. You know, I'm seeing people almost every day now, which is wonderful. Most of these interactions involve having a beer, having a glass of wine. I'm just not used to it. Like, I'm wrecked by the end of the day.
Yeah,
I'm glad we're doing this in the morning.
Right. Okay. Yeah, it's a bacchanalia. TripleByte Screen helps you screen engineering skills quickly, reliably, and free. Evaluate your applicants with TripleByte's testing technology at no cost to you. You just sign up, create a test, and start identifying the best talent among your applicants. You can save interviewing time, free up your interviewing team's time to focus on the strongest applicants based on proven technical skills instead of resumes and credentials. You can compare applicants against the global engineering talent pool to hire with confidence. Deliver a great applicant experience with TripleByte Screen. Candidates love the 30-minute tests, and over 80% of applicants complete those tests. You get data to compare all applicants, and test takers get detailed technical feedback to help them improve. You can build diverse teams, and you can use it for free with no upsells. Evaluate your applicants with TripleByte's testing technology at no cost to you ever. TripleByte invites test takers to join the TripleByte community, so offering this product for free helps TripleByte build their membership. You can visit triplebyte.com/company/screen to get started. That's triplebyte.com/company/screen to get started with using TripleByte Screen. Thanks to TripleByte for being a sponsor of Software Engineering Daily. I was listening to your recent episode with Brad Stone, the Amazon Unbound author, who is maybe the best modern business writer.
I think he's up there. I would put him right up there with a different style than like Michael Lewis. So he's much more, company specific focus, but like Walter Isaacson,
right.
Brad is just, he's wonderful.
Yeah. The ability he has to investigate that company that is pretty much impenetrable is really amazing. The one thing that stood out to me, especially in relation to the episodes you've been doing about Berkshire Hathaway, and I read Snowball not too long ago.
Great.
It's another great one. Is the idea of the fully integrated conglomerate versus the disparate conglomerate. So if you look at Amazon, you have basically a conglomerate that has few boundaries between the different businesses that are under its brand.
And famously, Brad in Amazon Unbound talks about how Bezos has been saying in recent years to mature businesses within Amazon, what are you doing to help these emerging growth businesses within Amazon? It's all integrated.
Right. Which is in stark contrast to the Berkshire Hathaway model, right?
Yeah.
Do you have any perspective on which is superior?
I do, actually. I do. And you're referencing, we Ben jokes that we're very self-indulgent on Acquired. We tend to do like 3-hour episodes. We've now done 3. The third is about to come out. 3-hour plus episodes on Berkshire Hathaway, just telling the whole story. And this third episode hasn't come out yet, but we kind of end it with like Warren and Berkshire. He's the GOAT. Like, he's the greatest investor of all time, almost without a doubt. However, his whole style and the approach and everything that Berkshire Hathaway has become, you got to remember, Warren was born in 1930. It was shaped by his experience growing up in America. He always talks about never betting against America. The whole philosophy behind Berkshire Hathaway is that the future is mostly going to look like the present. Yes, there was lots of change in America between 1930 to 1950 to 1970 to 1990. But probably on the whole of those, 60 years, there was less absolute change in the world than there's been in the past 1 year, And so I think the way Berkshire is this decentralized conglomerate with all these different businesses that are wholly independent. Warren famously has this line that he wants businesses that can be run by a ham sandwich, like they're just on autopilot, from reading The Snowball. And that's just not the way the world works today. So my view, although I have so much respect for Warren and Berkshire, I'm a shareholder. I'm happy to be a shareholder. I just think Amazon's approach is in a world where there is so much more change that is happening every day and it's accelerating. You can't run a business like a ham sandwich. And the Amazon approach is far superior in today's environment, I think.
Can they still be successful looking for the ham sandwich kind of businesses? I mean, because I guess the modern equivalent of that is like, what's that private equity firm in Austin? Silver Lake or something?
Yeah.
Or what are they called?
Vista.
Vista. Yeah. Vista.
Yep.
I mean, that's the technology equivalent, right?
You know what? You can do that for sure. I don't think so, though. Like, businesses like take Coca-Cola, right? One of the famous Berkshire Hathaway investments. When Warren invested in Coke, it was right after the New Coke disaster. And this was in the late 80s. I think Berkshire made a 10x return on their investment in the first 10 years. But then the whole world realized, it's Coke. It's a really great defensible business. It's a brand. People are going to keep drinking it. People are going to keep drinking Diet Coke, especially. And it got fairly valued. And so over the next 25 years that Berkshire held onto all of their shares of Coke to this day, they've only returned 3.5x from the last 25-year period. So it's 10x in the first 10 years and then 3.5x over 25 years. And those types of businesses get fairly valued, and then they, you're not going to make outsized returns on them. But you asked, can Berkshire continue their success investing in ham sandwich businesses? No, I don't think so. However, Berkshire, and it was not Warren's idea, it came from likely Ted Weschler, one of the two investment deputies who report to him. Berkshire has made one of the greatest investments of all time in the past 5 years, right up there with the Naspers investment in Tencent, right up there with SoftBank's investment in Alibaba. The 2016 Berkshire investment in Apple has returned $89 billion in gains.
Didn't know that one.
To Berkshire. So, which is, we did the math on Acquired. That single investment in 2016 has returned as much or more dollars than the entire rest of Warren's career.
Wow. Have they talked about the reasoning behind that? Like, what was because I know they placed a really big bet at some point. And when I saw that, I was like, yeah, okay, whatever.
Yeah, right. And everybody was like, oh, Apple interest, whatever. So it didn't come from Warren. So starting in was it 14, 15 maybe? He first hired, no, it was earlier than that. he first hired Todd Coombs as a deputy investment manager, and then Ted Weschler. And they have very different styles than Warren, Ted especially. And Ted got interested in Apple. We don't know if it was Ted or Todd. I believe it was Ted. Got interested in Apple around 2016. He had discretion to make up to $1 billion bet on his own. So he put $1 billion into Apple in 2016. And then to deploy more capital, he had to get Warren on board. And so the rationale that convinced Warren was, and that Warren talks about, is Apple is like a consumer brand. It's more like Coke than it is like a technology company. You know, the brand loyalty is so high. It's a consumer products company. I don't know, right? I mean, like, sure, Apple has a lot of brand loyalty, but I don't think that's why people keep buying iPhones. I think it's because iMessage lock-in. I think it's because of their technology is so far ahead, you know, all this other stuff. So, yeah, we'll see.
It is. I mean, even as an Android user, like I'm an Android guy. I actually can recognize, like, there's no Android watch that's as good as the Apple Watch. There's no product with the consumer appeal of AirPods, even though I don't personally see. I don't. AirPods, to me, is a crazy phenomenon. It's like I don't know if you've used other Bluetooth headsets, but AirPods is no better than like a $25 Bluetooth headset. It's very strange. It's one of these phenomenons where basically nobody was buying Bluetooth headsets relative to how good a Bluetooth headset is in your life. And so Apple just basically said, we're going to make a Bluetooth headset and we're going to market it in a way that people will buy it. Like, the technology was already there. Maybe I'm the crazy one here, but
no,
like,
I don't think you are. But I do think that actually does illustrate the ecosystem lock-in that Apple has.
Right.
With AirPods, if you use all Apple devices, they seamlessly switch. But just so, like, I've done so many times now, I'm listening to a podcast on my phone. I get home, I'm out for a run or whatever. I open up my iPad, I start watching a YouTube video, and it just seamlessly pops over. Right.
And it's easy to underestimate how good that frictionless is. But anyway, we'll leave that to the John Gruber crowd.
We'll leave that to the talk show to talk about.
Yeah. And I guess it doesn't matter that Charlie Munger doesn't understand Bitcoin.
No, I mean, for my personal portfolio, you know, I view Berkshire as just a very different part of my portfolio than tech stocks, angel investing, crypto. You know, I view it as like, you know, I'm going to get nice appreciation in this. They're not going to do anything too dumb. I'm not going to lose capital. I view it as my quote unquote safety portfolio. And like, yeah, I invest in crypto. Like, I don't want Charlie invested in crypto for me. I can do that.
You've been studying investing for a lot longer than I have. I'm quite sure of that.
Although you've probably gotten quite the education in, was it 6-7 years you've been doing this now?
Yeah, 6 years. But I mean, just to show you my level of financial responsibility, I had almost no money when I started this. So, like, I am not invested prudently. But, you know, as a prudent investor, as somebody who's a student of the markets, how do you evaluate crypto? How do you is it a this time is different type of asset, like a new type of asset? Is it game changing? Is the jury still out? What's your perspective?
Okay, so here's how I think about it. And a lot of this is real time for me and informed by the Berkshire series we did. You know, I unveiled in episode 3 of the Berkshire series that's coming out soon. I'd just been noodling the whole time. I mean, we spent weeks, months studying Berkshire. Warren's mindset that I was talking about with this never bet against America. You know, what was the world looking like and going to look like during the prime of his career? I think he's totally right in the concept of, if you can figure out a trend that is almost unassailably going to continue for decades into the future, you can invest behind that trend with a lot of confidence and ignore any ups and downs along the way. And he did that amazingly well with the rise of American business in the 20th century. To me, it just hit me towards the end of Berkshire research that it's blindingly obvious to me that same trend exists now, but instead of never bet against America, it should be never bet against the internet. And same day, it feels today like the internet is mature. The internet is like 20 years old, and the rate of growth and change and everything happening is accelerating and it's globalizing. And crypto to me feels like a core part of that. All parts of crypto, Bitcoin, the Ethereum ecosystem and everything going on there, DeFi, NFTs. And so yeah, my view is like, look, I have no idea what's going to happen tomorrow, a year from now, whatever. But like when I zoom out, and we should say too, this is not investment advice.
Right.
This is entertainment purposes only.
Right.
We're just jamming about what we do. For me, when I zoom out, it's very hard for me to imagine 5, 10, 20, 50 years from now where digital money, decentralized, permissionless, finance and business is not a thing on the internet. So that's how I think about it. How are you thinking about it?
Couldn't have said it better myself. I don't know governmental direction. Like, if you get a state-sponsored cryptocurrency from the United States, what happens? I think, doesn't China already have one?
They're working on one. I don't think it's live yet.
Or it's like centralized, right? It's like
the digital one, yeah.
Right, which is that's like no different than normal currency today.
That's
right?
what I like. I haven't studied it enough, but that's my thinking, right? Like, it's still it's still fiat currency.
They can still print more of it. I don't think that's anything new. I think it's gigantic, and I don't think it's tulips. I think there are tulips, in the garden. But,
yes, 100%. That is the case.
But like you look at, do you know the story of Uniswap? You should do an acquired episode on Uniswap.
Oh yeah, dude, I've been diving deep on Uniswap. We got to do Ethereum first. So we did Bitcoin in January. Okay. Next up in the crypto series is Ethereum, and then I think the natural one after that is Uniswap
or MakerDAO. MakerDAO might be the next one. But yeah, Uniswap or
so
Coinbase,
cool.
Maybe Coinbase.
Coinbase too. Yep.
Yeah, but Uniswap is like that's a crazy story because I think the craziest part of that is just how like even Ethereum was kind of the work of several people, right? Several people brought that to market, but Uniswap really feels more like the genesis of just one guy who.
Yeah, it was Hayden, right?
Hayden, yeah.
Yeah,
Hayden
and
Adams.
the story as I understand it, I haven't dove into the research yet fully. Is he was laid off, right, or something like that?
Yeah.
And he wanted to get into crypto, but he was like, I kind of missed it. And I think he had a friend who was like, dude, if you spend like 2 months on this, you're going to be a world expert.
His friend was named Carl Flursch. Carl Flursch was one of the first 10 guests on my podcast.
Amazing.
So Carl Flursch, so I did shows when Ethereum was doing its pre-sale, and I didn't invest. I didn't invest in it. I covered Ethereum during the Ethereum pre-sale, and I was like, "Who are these people? Like, these are the weirdest people I've ever met."
Oh my god!
Wow. I mean, absolutely no offense. Like I'm very endeared towards weird
people,
weird nerdy people. Like we both grew up playing some Magic. Like Magic the Gathering is like exactly like the kind of people that attracts the Ethereum people. But like I remember, I interviewed like the creator of MetaMask. I interviewed Carl. Carl, like he was telling me what Ethereum enables, and he was like, "Yeah, we're gonna have basically Uber, but it's gonna be decentralized, and that's what Ethereum enables."
You're like, I don't know, man. That sounds crazy.
I was like, I don't know about this.
Oh, so great.
It's like Ethereum's 30 cents, okay, I don't know how to do this wallet thing. I'm just going to pass on this. I've got podcasts to record, I got money to make. I got ads to sell.
So great. Did you eventually figure it out and invest?
Not really. It took me until 2017, 2018, and even then I wasn't.
Oh, that's still early enough. Like that's great.
I didn't buy that much in 2017, 2018,
I think, look, again, not investment advice. I think in the long run, like just even in small amounts in your portfolio, small percentages, just participate in this stuff now. Like it's things like the base layers, Bitcoin likely, Ethereum almost certainly. Yeah, there are Ethereum killers out there or whatnot, and but there are enough network effects here. I think it's going to be fine. You're just going to participate in a massive, it's the Warren Buffett thing. Don't bet against America. Don't bet against the internet. Even if you're in a small position today, you're going to be great.
Yeah, I agree. So you've been looking into DeFi a lot?
Yeah. Well, okay. So here's the other thing about crypto that I just think is so fascinating you and I both do a lot of angel investing, which is great. We meet great founders through our pods, and we get access to invest in their companies, and their folks are kind enough to let us do that. The amazing thing about crypto that I don't think enough people appreciate yet, it's completely permissionless. Anybody listening to this can go invest in Uniswap. And you don't need special access. You don't need to know anybody. You don't need to be friends with Hayden. Like, you can go do your own research, and you can go buy governance tokens, and then you can participate in the governance of this thing. That is just like an incredible step change versus any financial asset.
Actually, even the crypto VCs, I have a crypto VC friend who I met a few days ago. He was telling me about a deal he did recently. There's no paperwork in the deal. Like, they do the deal through a smart contract.
Amazing.
Millions of dollars.
Yeah.
As a VC investment through a smart contract. I was like, I had no idea this was like even crypto VC. This how it works.
Well, a slightly different situation, but there's one of the original set of sort of early crypto dedicated focused funds and firms is a firm called Paradigm. Great folks. The two co-founders are Fred Urchin, who's the co-founder of Coinbase, and Matt Huang, who is a partner at Sequoia. They were going on. I can't remember how big their first fund was. Well, let's say it was like 300 million or something like that USD. But it was 2019 March 2019, I think, when Bitcoin crashed down to like $3,800 a Bitcoin. They called the entire fund and put, whatever capital they hadn't put to work.
Oh my God.
They called the entire fund and put it all into BTC.
Oh my God.
Imagine a traditional venture firm doing that. They did that, and you can do that in crypto. And that was a good move.
Is running a crypto VC firm more like running a hedge fund?
I think so. Not that I know it all from experience, but if you look at a lot of the folks that are doing it now, a lot of them come from hedge fund type backgrounds. It's this weird mix of like early stage venture with hedge fund like dynamics.
Like active portfolio management.
Yeah, active portfolio management.
And like, you would theoretically want a bunch of technical analysts on like just looking for, like, you would want, I mean, the best way to do it, I guess, is Alameda Research, right? I
actually don't know them.
You haven't heard Alameda Research?
No.
Have you heard of Sam Bankman-Fried?
The name sounds familiar, but no, I'm
he's
betraying my ignorance.
He's like 29 years old, and he's made $10 billion.
Whoa.
Yeah. He's like a wonderkind.
In crypto?
Yeah, he's made through crypto. So he I think he studied physics at MIT, worked at Jane Street, and then went from Jane Street to start this thing called FTX.
Oh, okay. Yeah, I know FTX. Yeah.
Okay.
I just didn't know he was the guy.
Yeah, so he started FTX.
Wow.
And then which is like an exchange.
Yeah.
And I think they just bought an arena somewhere. Yeah. I think there's an FTX arena, a basketball arena.
Oh my gosh. Wow.
But this is another acquired episode. And Alameda Research, and they're one of like the top investment firms.
Wow,
crypto VC firms.
Man,
so, yeah,
I'm betraying my ignorance. But like this, back to the Berkshire comparison. This is the thing. Like, the scale at which this stuff is happening now makes Berkshire look quaint.
Yeah,
well, Warren's whole thing was he wanted to be a millionaire by age 35, and he made it by age 32, and so that was amazing, right?
Yeah.
Now we're talking about what, a 29-year-old who's worth $10 billion. It's incredible.
Here's a puzzle. What do products like Dropbox, Slack, Zoom, and Asana all have in common? The answer is they were all successful because they became enterprise ready. Becoming enterprise ready means adding security and compliance features required by enterprise IT admins. When you add these features, enterprise users can buy your product, and they'll buy a lot. These features unlock larger deals and faster growth. But enterprise features are super complex to build. They have lots of weird edge cases, and they typically require months or years of precious engineering time. Thankfully, there's now a better solution. WorkOS is a developer platform to make your app enterprise ready. With a few simple APIs, you can immediately add common enterprise features like single sign-on, SAML, SCIM user provisioning, and more. Developers will find beautiful docs and SDKs that make integration a breeze. WorkOS is trying to be like Stripe for enterprise features. WorkOS powers apps like Webflow, Hopin, Vercel, and more than 100 others. The platform is rock solid, fully SOC 2 compliant, and ready for even the largest enterprise environments. So what are you waiting for? Integrate WorkOS today and make your app enterprise ready. To learn more and get started, go to softwareengineeringdaily.com/workOS. That's softwareengineeringdaily.com/workOS.
Yotascale is a leading cloud cost management solution designed uniquely for engineers to make smart cloud cost decisions with smarter attributions and smarter analysis. With Yotascale, you get a complete view of your cloud infrastructure spend, including containers and Kubernetes, 95% cost attribution accuracy, actionable recommendations, and continuous cost anomaly detection. You get team-based alerts via Microsoft Teams and Slack to prevent monthly bill shocks, and machine learning-based projections with predictive analysis and budget alerts for teams, products, and applications. Yotascale is widely adopted by some of the best engineering teams in the world, including Zoom, Hulu, and Compass, who depend on Yotascale to help them save up to 50% on their cloud costs. Request a demo and find out how Yotascale can empower your engineering teams today. Visit yotascale.com/demo. That's yotascale.com/demo. What percentage of your portfolio do you put into crypto?
Yeah. I'm not quite there yet, but like my theory and philosophy is I want to, and again, this is not investment advice. I do not recommend most people do this. But in terms of, so I have, my sort of like, I call it the safety portfolio, and that's like Berkshire stuff and like real estate, like, my family is going to be fine no matter what happens. And the rest of my portfolio, I take the long-term view on. So for that rest of the portfolio, I'm aiming right now to be roughly a third allocated to U.S. or Western traditional tech companies, both big and small, a third to crypto, and a third to China tech companies.
No cash?
Well, that's in the safety portfolio.
Okay, got it.
Yeah. This is in the the portion of my portfolio that is like, this is all about long-term capital appreciation.
And so in the crypto bucket, you still have like the question of how much do you put into aggressive stuff and how much you put into Ethereum and Bitcoin.
Yep, exactly. So I've only just recently started transitioning away from pure just. I was for years just BTC and ETH, right. And only just started investing in other stuff in that bucket. So far, Uniswap, Compound, and Solana, which we've got some great folks in the acquired community.
And I don't know if you know, but like Sam Bankman-Fried is like one of the people who created Solana. I believe he co-created Solana, or his organization co-created it or something, or sponsored it, or they're heavily involved in Solana.
Amazing.
Yeah.
Wow. Yeah, we really we are overdue on acquired for going deep into the whole rest of the crypto world. I mean,
unfortunately or fortunately, the domain that I think both of us are kind of pursuing, like the business of software and technology, is expanding at too much of a fractal rate that it's getting away from us.
It's so true, but it's great, man. Like the rising tide is just gonna lift everybody. I don't know if you've seen, like, there've been so many awesome creators that have come into the business of tech space
for sure,
and it's just so great. We all get to like collaborate
for sure.
Yeah, we've done a bunch of stuff with Packy McCormick, who does Not Boring, and Mario Gabrielli, who writes The Generalist, Lillian Lee, who writes Chinese Characteristics.
Did she come on your show?
Yeah, we did an LP episode with her.
Oh, nice.
She's great. Have you had her on the pod?
I have not. I'd like to, though.
If you want an introduction.
Yeah.
She's wonderful. I assume you've been collaborating with lots of folks.
Well, you and I both know Cortland, Indie Hackers.
Cortland's awesome.
I agree with you. Like the amount of content relative to where it was 6 years ago when we started. Like I used to hit inbox zero on my podcasts all the time. And granted, I was listening to podcasts way too much. but I still hit inbox 0. Now it's impossible. Now scrolling my podcast app, and it's amazing that we should have anticipated this. But I can scroll my podcast like a Twitter feed now.
Yeah,
it's just too much content.
But I think it's great though for creators because we can all have our niches.
Yeah,
and
absolutely.
it's big enough. I sort of got this philosophy from we've done a bunch of stuff with sort of the OOG of business and tech podcasting,
Calacanis. Right? Oh, yes,
yeah, he's so great. And he sort of takes this approach. He's like he kind of took us under his wing, and he's like, look, the young guns are coming up. Great, like let's do stuff together. And yeah, it's great.
And he's back on top.
And now he's back. We got to talk about All In.
Yeah.
How good is it?
It's the best.
It's so good.
Why is it the best?
Okay, so you had this in the prep questions. I think there are a few things I would say. Just like the chemistry between the four besties is like that's the magic, like the having the different political viewpoints. Who would have thought that a tech show that is mostly about politics would be interesting, let alone the number one pod out there. Chemistry is great. They have played so well this, because they all have other business activities and they don't need to monetize it. They've played that up so well and just made it all about the community, the open sourcing it to the fans. What a brilliant move. Like the value that they get out of their reach and influence versus what they've given up in terms of selling advertising is immense.
Well, it's the A16Z model effectively, right? We've got a great media channel and we monetize it through venture capital.
Exactly. And all of them in different ways. And then I would say the last thing that I think that they nail relative to the traditional media landscape and even relative to, I think they're ahead of all other pods, us included, you and me right now. They break the fourth wall. Like, it's not even that they break the fourth wall. There is no fourth wall.
For sure.
They act like the audience is right there with them.
For sure.
And it's so impressive. What do you think?
One thing I think is pretty interesting is, so they came out during COVID, right? And COVID was this time where, like, some people have the sense that surely somebody out there knows what's going on here. Like, surely this is a conspiracy. Like, this was planned. Like, the whole, the smartest people in the room knew what was going on. They knew what was going to happen. And here you have like several billionaires on like sitting around the table saying they don't know what's going on, right? Like David Sachs has deep ties to Peter Thiel. Peter Thiel is probably one of the most informed people in the world, like co-founder of Palantir.
Yep.
If somebody who's basically like good friends with the co-founder of Palantir and he doesn't know what's going on, like he can't tell you anything more than, not much more than what you can read on Twitter, then it's kind of groundbreaking in the sense that it indicates that nobody knows what's going on.
Yeah. I hadn't thought about this till now, but I don't think all four of them are billionaires, but like certainly at least one of them is.
Yes.
Probably multiple, and they're all well above you and me.
Yes.
Let's put it that way. But I don't know anything else, any other piece of media content thing that has humanized billionaires so much as the All In podcast. Like,
for sure.
They really, especially in an era where every increasing day, it feels like, the billionaires versus the rest of us. It's like they switch sides. It's amazing.
Any perspective on the SPAC phenomenon?
Oh, man. Nothing unique. Ben, my co-host, has been, he's been actively trading SPACs since the phenomenon started. No unique perspective. The only thing is like I graduated from college in 2007. And went and did investment banking on Wall Street right out of college. And in 2007, that summer of 2007, before in the fall before the crash of 2008, when the market was at its peak, there were a lot of SPACs on the market at that point in time. And so when everything started heating up in SPAC land again, I was like, well, I've seen this movie before. I don't know. It could be different this time, but I don't have enough of a view that I'm just going to stay out of it. That's my view.
Do you have any macroeconomic perspective on like the, crash, is a crash incoming or?
I don't know.
I mean, did you get spooked a few weeks? What was it? 3 weeks ago? When did the markets crash?
Yeah. Well, there was this weird like double hilltop thing, right? Where like the growth public equity markets crashed. Was it 3 weeks, a month ago or so? Tech stocks, and crypto stayed high, and then like 2 weeks later, growth stocks had recovered a bit. And then we had the crypto crash, whatever that was,
right.
2 weeks or so ago. And now that's recovering. I don't know. I just view it all as noise.
Yeah.
Again, but I have my portfolio set up that way very intentionally, where I'm like, everything that I have allocated to those types of assets, is like I don't need to touch that for 5, 10, 20 years. So as long as I think that like these companies, like Zoom is a great example. When the pandemic hit, I was like, okay, I missed Zoom in the IPO, and this is if there ever were a time I'd been wanting to buy, and yes, the price is high, but I just got to get in. And then Zoom hit $600 a share, and people were selling, and it was tempting, but I was like, I don't know. Do I think like that there is a reasonable possibility? Can I see a future where in 5 years, in 10 years, Zoom is a $6,000 stock, not a $600 stock? Yeah, I think I can. Then Zoom went back down into the 200s, and that sucked. But I don't know. I didn't really care. As long as my faith wasn't shaken in that long-term future, and it hasn't been. I don't know. What are you doing?
I wish I had the portfolio architecture that you do at this point. I'm a little bit more like playing it as I go along. I'm still just like I've told you a little bit about this, but like I still want to start a company. I want that to be my route to victory.
Yeah.
And then like I think of like investing as just sort of a learning experience and kind of a, I don't know. I don't pay as much attention to it as I probably should, but I sort of like throw some money into like private deals when I can get into private deals. I throw like 50% of my portfolio into crypto, and then 50% into stocks. Actually, no, it's like 30. It's like probably 40% crypto, 30% equities. And then 30% cash, actually.
Nice.
I just hold a lot of cash.
That feels like a decent allocation.
Yeah.
The other thing that's, it's just, I know we keep harping on this, but it's so freaking cool that, like, you don't need any permission to do that.
Yeah.
You don't need a wealth manager to do that.
Totally.
Like, the gatekeepers are dead.
Right.
So cool. Should we talk about
Sure,
company?
Sure, whatever. Yeah.
Yeah.
Sure. Yeah.
Dude.
I haven't talked about it that much, but yeah, I'm making a company.
This is huge news. I'm so excited for you.
Yeah. It's gonna be cool. I shouldn't say too much about it, but it's around gaming. It's a gaming based company. Grew up a gamer. Apparently you did too.
I definitely did.
So yeah, we'll see more about that in the months to come.
Tell us about the thought process, right? So you've started companies before. Mm-hmm. You started at Amazon, your career at Amazon, right?
I didn't start my career at Amazon. I started my career at a trading place, actually. That was the first. Well, I did internships, and then when I graduated, I went to a trading place. I worked there for 5 months.
Also, don't say you don't know. You're not financially literate. Like you've been a professional investor.
Yeah, I don't think any of my code made it into production when I was working at that place. I was an engineer, and I don't think any of my code made it into production.
Don't sell yourself short.
And then was an engineer at a few other places, and then. Yeah, since starting the podcast, started some companies that didn't work, and now I think I finally have enough battle scars. I think I know what to do, so I know some direction.
I love it. What was like the major thing that you felt like? We won't talk about the idea, and maybe that was the thing you felt that you just found the right idea finally. But what was the what was the big emotional hurdle where you're like, all right, I'm ready to fight this fight now?
I mean, the pandemic was really hard for me. Last summer, the last company I started, or well, I didn't start a company around it, but I started a product. I built a product, a collaboration product called Find Collabs that really just was not getting any traction. I was trying all these different things. I couldn't make it work. And eventually I stopped working on it, and I started focusing more on the podcast. I was like, okay, look, I'm just going to focus on the podcast. Maybe I'm going to do investing. Maybe I'm going to be a full-time investor. I talked to you a lot about that. And
I was like, don't be a full-time investor.
Well, because you were kind of going through something similar. You were kind of
totally.
like evaluating it similarly. We could talk about the market, the venture market. But I did a whole lot of soul searching, basically over the last year. And then I did On Deck recently. You know On Deck?
Oh yeah, cool. How was the experience?
It was actually great. Actually, during the middle of it, like I was not having a great time because I was surrounded by a lot of people who seemed like they knew what they were doing, or they had like a lot of people. On Deck's great. Like there was a bunch of people who had sold their companies recently, and they're like, "What am I going to do next?" And they've got some great ideas for new companies they're going to start. There's some people with like they already had their great idea, and they're just at On Deck, sort of like looking for support, looking for fundraising, looking for a co-founder. And I was just basically like, "Yeah, I'm a podcaster. I don't know why I'm here. I don't know what I'm doing."
Oh man, this is like the. It feels like when you show up at college as a freshman, you're like, all these people are so impressive. Like, what am I doing here?
Right.
How did I get in?
Exactly. That's exactly right. And that's actually how I felt at the beginning of college. But then one night, I had come home from one. Like they put together all these social events during On Deck, and I came home from a social event. I had a number of interesting conversations with people, and I just had like ideas bouncing around in my head. And I got home from this event, and I'm like, I think I've got something. And I just started, opened up a Word document and started typing. And I was like, okay, this kind of makes sense. And I went to sleep, woke up the next morning. I'm like, I think I got a little more ideas. And gradually, like I'm making more and more progress. On Deck ended. I still didn't really have the idea fleshed out. But I got home to San Francisco. I'm still thinking about this. And then, one day I open up Google Slides and I start making a pitch deck. And I'm like, okay,
great.
I got it. I know what to do. And so like I think there's really something to On Deck for this kind of person who feels a little bit lost, feels you're not at the Y Combinator stage where you know what you're doing.
Yeah.
You want to start something, you want to do something entrepreneurial, but you need just some ambient reinforcement. You need to put yourself in the right environment. You need to put yourself among the right people. And there's really something to that.
This is so cool because yes, obviously, yeah, you articulated so well the need for something like this. YC tried to do it. They've tried to do it in several iterations. I remember they had the YC Fellowship. Do you remember that?
No.
It was basically like On Deck. But the problem was it's kind of like this isn't quite the Hamilton-Hellman counter-positioning thing, but the golden goose at YC is YC. And I would imagine, I'm just projecting from the outside, it was really hard to allocate the proper amount of resources to making something like On Deck great when like YC is generating billions of dollars of value for you.
Innovator's dilemma.
Yeah, innovator's dilemma, right? Exactly. And it's just so cool, yeah, that like On Deck exists now, and there are probably other folks. So what are the terms of On Deck? How does it work?
No terms. Like you pay $2,400, like you just go.
Oh, cool. So they don't. It's not like they get equity in whatever you start, or
no, it's not a venture thing. Like which is cool. Like I mean, Eric Torenberg started it at around the same time he started his venture firm, Village Global.
Yep.
So he's like they have a big venture firm. So I'm sure if you have a great idea, you can communicate with them. But they're decoupled.
That's cool. So then, yeah, you don't have the like real or imagined, like, oh, I think I'm going to do something great. Do I want to give up my equity to do that's like a?
They want to be like college. They want to be the college of the internet. They want to be the Stanford of the internet. And so that's why they've launched all these programs like On Deck for podcasters, On Deck for marketers, On Deck for low code people, On Deck for entrepreneurs, On Deck for investors. It's it's a compelling business. It's a compelling business. I think they just raised from Founders Fund at a $250 million value. I think it was $250 million valuation. And I didn't get it until I attended it. And then I was like, oh my God, this is a really capital efficient, really powerful business.
Yeah. I know Packy at Not Boring did it before starting Not Boring. And like, obviously great people.
Right.
Yeah. Okay. So you said when you got back here, you opened up Google Slides, you made the pitch deck. That's a different approach than you did, I know, with your previous products that you tried building.
Yes. I mean, this one, I'm gonna take the responsible approach of bringing on investors and like I'm gonna try to find a co-founder or founding engineer, and instead of just sort of like throwing a product together like with too much emphasis on my own work.
Yeah, it's interesting, right? Like we're, on the one hand, we're like totally lucky. I mean, amazingly fortunate and lucky, you with Software Daily and us with Acquired, that like we have a business we've built that can fund things. But yeah, it's such a different approach. Like, you certainly could do that again, right? And fund development, internally just through Software Daily. You've got this amazing community. I've found this in some of the things that I've been doing on my own and, in the last year. And I'm so grateful for my partner, Ben at Acquired. When it's just you, like it's you don't have that like forced accountability,
That's right. Doing this business, like large. I mean, I started the podcast with another guy. He left because he wanted to become a software engineer. Like he was actually very motivated by doing the podcast. Like it worked too well.
Right.
So he left to become
he took it literally.
He took it literally. He's like, there's a really interesting thing we're exploring here. I think I'm just going to become an engineer. I'm like, okay, well there goes that. And then but Erica's joined me. Erica helps me with the podcast. She's invaluable. She doesn't produce content, but she runs everything behind the scenes. But yeah, for the technology products I've built, it's mostly I've just done it myself and hired contractors. It's just such a terrible approach. And I've tried it did it like 2 or 3 times.
Yeah.
And it's just dumb. I kept making the same mistake. Like, I don't know.
I think there probably are some people that are perfectly happy and capable of executing on big ambitious things just like completely on their own. Absolutely. I've learned I'm not one of those people. And sounds like maybe not you either.
Yeah. But the venture stuff.
Should we jam on venture stuff?
Yeah. So I mean, like, this is a direction that both you and I like have sort of gradually migrated to. Well, I guess you were full on venture capitalist for a while.
Yeah, a decade. Wow, professional venture capitalist.
Yeah. So like, how did you like? What's been your maturity process, and like, how did you come to your current strategy?
On that, like, I was super, super, super fortunate. I joined Madrona, which is the largest venture fund in Seattle. Was the first investor in Amazon. We would always joke, we're still looking for that next. I don't think they're ever going to find it. And that's totally fine. You can't do better than Amazon. I joined Madrona when I was 24. So I got to, I tell people when we talk about my journey in VC, I was like literally the last person in the door on the old mentorship model in VC, the apprenticeship model. I came in as an associate. There were like 5 or 6 partners. A few, there was a CFO and a fund admin, folks who are wonderful people. They're still there. And then me, I was like the only junior person. So I showed up on day one and all the partners were like, okay, great. We're on all these boards of these companies. We're making these investments. We're going to divvy you up. So here are 15 boards that you're going to join as a, observer alongside a partner. You're going to come to all these board meetings. You're going to meet these CEOs. You're going to like learn the business. You're going to carry our bags and metaphorically speaking. And that was just great. So I got to do that for a bunch of years, do that process, like come up, like help the partners be successful, then transition to making my own investments, small ones at first, and then larger ones. And I went to business school. And when I was in business school, I interned at Meritech, which is still not super well known to this day, but they are like the best growth investors out there, like the best.
Right.
So I got to learn that side of the business. Yeah, I was just so lucky. All these people mentored me, and then I left and started my own firm. I was like, oh, the natural thing. I'm going to go start my own firm, and I just realized, well, I realized really quickly that I thought I knew how to run a venture capital firm. I realized it's very different running a venture capital firm than being an investor at a venture capital firm and making investments. They are almost two wholly separate jobs.
Oh.
And the most important thing when you're running a venture capital firm is raising the money. and if you're aiming for any kind of traditional down the middle VC firm, we were a $55 million fund. That's a lot of capital to raise from nothing. To go convince people to give you $55 million is hard for anybody at any time, especially a new venture capital fund. It's not like you can build a product and show them a prototype. You literally can't do anything until you get the money.
You started in 2014, 2015?
We started in 2017.
2017, okay.
And it took a year and a half to raise the money. That was a great experience, but that was a year and a half, no salary, just pounding the pavement. And we got great LPs. But anyway, while all that was going on, Ben and I had started Acquired back when I was at Madrona. Probably, what year did you start?
2015.
We started 2015 too.
Right.
And you've seen, what Acquired's become.
Oh, yeah.
I'm sure for you, what Software Daily's become is
yeah.
beyond our wildest dreams.
Oh, yeah.
Wildest dreams. And so, yeah, I kind of felt at a certain point like I checked all the boxes in professional VC. And meanwhile, this other thing that was a
Right.
hobby was bigger than I ever imagined.
Well, and VC got ridiculously competitive.
And VC, yeah. So then this is the market. Madrona and Meritech both have done great at navigating this.
Yeah.
When I joined, VC was not a competitive industry. Like it was clubby.
Yeah.
You could be really, frankly, lazy and still do great. It was metaphorically shooting fish in a barrel. There was way not enough capital
Yeah.
for the opportunity of funding startups, and so you could be bad, just like straight up bad, and make money.
Yeah.
That's not the case anymore. And I kind of think so. I was thinking about this before the show. I'm curious what you think participating in both sides of this world is the analogy. I think the venture business has become like the media business, and both literally in terms of you got to have a following, but also in terms of the industry structure. So here's where I'm going with this. In the media business, there are two strategies that work now. You can either be essential, must-consume content. You can be Disney and be like, we own Marvel, we own Star Wars. Like, this is tentpole. The way we compete with Netflix is like, you are gonna pay, especially if you're a parent, you're gonna pay us because you gotta have this content. So you can be Disney. I think that's, Sequoia and Andreessen and the like these days. They're Disney. The other way you can have essential content is to do what we're doing, is just like own a niche. Like, you are the best software engineering content on the internet, period. You've been doing it for 6 years. You're unassailable. But you're an indie, and we're the same at Acquired. Or you can be the platform that you can be the Netflix, or you can be the YouTube, where you're just like a horizontal platform and everybody's on the platform. I think it's the same in venture. You got Sequoia, you got Andreessen, they're the Disney. You've got the individual solo capitalists, the Alad Gills, the Locky Grooms, I won't put you and me in the category, but like we're working on it. And then you got the platforms, which is YC, and maybe On Deck too. Anything else that's not one of those strategies, good luck, you know.
Well, growth, Tiger.
Well, right, but not good luck. You're a commodity. You're a commodity business. Like in the media business, you're pumping out commodity content. In the venture investing business, I don't mean this to denigrate Tiger at all. I think they're awesome. I think they realize what they are, and they have an excellent strategy.
Right.
But they are paying market prices.
They're defining the market
They
price.
are defining the market price. I guess maybe that's the way to do it. Maybe they're taking like an Amazon approach. Yeah, that's kind of how I think about it. So all these firms that don't have the brand of a Disney and don't have the niche content of a super expert indie content producer, the media analogy, and aren't YC, it's tough. It's a tough place to be, I think.
There was a dinner I was at like 2 or 3 years ago, and with a bunch of investors and entrepreneurs, and we're doing this thing where we're all just like posing questions to the table and voting on the questions. And I asked the question, who's going to be the more successful firm in 10 years, Sequoia or Andreessen?
Oh.
And the only people that raised their hands for Andreessen was me and one other person at a table of like 10 people. And I don't say that because I like dislike Sequoia or something.
They're great.
I just think they have taken the approach of we're gonna be like soft spoken. We're gonna be kind of like, behind the scenes. And
for a long time, their slogan was "the entrepreneurs behind the entrepreneurs." I think they finally ditched that. But.
Yeah, I think they're slowly building out like more of a content direction. But I think like the challenge is like, I think the days of winning through maybe I haven't seen behind the scenes as much, but like being like winning as being like the best consigliere or like I don't know, I think like the media channel, the whole media approach that Andreessen took was really prescient and
early. They started in 2009 with this strategy, and they've kept this strategy. They've kept doubling down on it year after year. Yeah,
and it's because it's about being top of mind. I think and by the way, I think if Sequoia created a giant media arm, they would be like I would have no take anymore. It would be neck and neck. Like I just think they should.
It's
they
sort
should
of
invest
surprising to me that they haven't.
Because it's anathema to. I mean, you did this. I did listen to The Acquired. Like it's anathema to their brand.
It is, but it's anathema to what they used to be. But I actually think one of the things I respect the most about Sequoia, that started with Don Valentine, who founded it, and now Doug Leone, who runs it. We did an episode with him, and he was pounding the table that Sequoia is about change, and it's about. I think Doug's line was. In his Doug Leone, accent way of him saying things is when something is working like a dream at Sequoia Capital, we throw it out the window because you got to be constantly changing and evolving, and they've done an amazing job of that. The Scout program, the Global Growth Fund, there's so many things they've done and added to Sequoia over the years. So I bet they do something like this. I'm sure they're thinking about it.
So which firm would you have raised your hand for?
I would raise both hands.
Oh, you're such a diplomat. Such a diplomat.
Part of it's being diplomatic. I want to have friends at both places.
Okay, Dale Carnegie.
But come on, they're like the Disney and HBO. Like there's room for it. They each have must-have. They each have must-view content, and they each put immense amount of resources into building and maintaining that. Andreessen literally with content. Sequoia with God, nobody works harder than those guys. Like they have managed to get into just about every single company that matters. And that is what, at the end of the day, what matters. I think both. Although you're right, Andreessen perpetually surprises people on the upside and how much they've been able to do. And God, just look at crypto, right? Other VCs were laughing their heads off at them when they were raising a crypto fund. And yeah, who's laughing now?
Yeah, that's for sure.
The other dynamic that I have found, I didn't even anticipate, but has been so refreshing to me being a, indie angel investor now versus being a professional VC. As a professional VC, it is a blood sport. Like there's only one lead in each round, and you are fighting to the death with other VCs for any, hot company to be the lead. As an angel, nobody's going to turn down, our 10K check.
Yeah.
People might, but we're not trying to box anybody out.
Yeah.
It's just such a different dynamic.
It is. Yeah. You can squeak in.
You can squeak in, can get into seed rounds, A rounds, B rounds, D rounds, It's just for me. It's been so liberating. Not to be a professional money manager with a strategy that I need to stick to because I told LPs that what the strategy was going to be. It's like when I see something great that I want to do, I can do it.
So you're sector agnostic.
Sector agnostic, stage agnostic, geography agnostic.
Stage agnostic.
Stage agnostic. Yeah, absolutely.
So you put money into a Series B?
Totally. Or a D or whatever. I don't see anything different than that versus, it's all just a spectrum
That's
to me
true.
from seed to public
That's true,
markets.
actually, yeah.
And through what we do, the people we have on our shows, the people we meet through our communities, we meet great Series C companies. Why would I not want to invest in that? And because I don't have to go, if I were trying to go raise a professional venture fund and an LP evaluating me doing that, I'd have to say, well, okay, David, like, yeah, I get it. You worked at Meritech, but are you really going to go be able to lead Series Cs? Are you going to be able to beat out Tiger? Are you going to be able to go beat out Sequoia's Global Growth Fund and Andreessen and like to win? But you and me, we don't have to beat anybody.
It used to be that and maybe it still is, that like the infrastructure for being a small VC was kind of pricey, right? Like, or complicated, pricey, like you got lawyer. I actually don't know. I haven't raised my own fund. I've just signed some papers when I've gotten into some deals, and I don't read them very much.
Yeah.
Like they tell me to wire the money, I wire the money. Like I'm very unsophisticated.
They're
at this.
like off in Ibiza, like,
Yeah. So, I mean, if you want, like, if people are listening to, like, I'm sure there's people listening to this right now who have thought about becoming like
an angel
angel investor. It like, is the infrastructure there for it to be cheap? Like, do you use AngelList or something? Like, what do you do?
Well, until now and through currently, I'm just personally angel investing. So yeah, just like you, like there is no infrastructure. It's just, I get the DocuSigns and I get the Carta share certificates and it's great. I don't have to do anything. And, I glance over the docs, make sure everything but that's just because I've been beaten into me as an associate for so many years in VC of like actually putting those docs together. So yeah, as an angel, there's no infrastructure. But there's so many ways to actually have small funds, small non-professional funds now through AngelList that like, I haven't done it personally, but you and I both probably have plenty of friends who have, and, I've considered and am considering it. I think they make it really easy. When I was running a professional fund, that was the other piece of it was we had to manage the back office, right? Like we had a outsourced fund administrator. There are a few firms who are great that do most of the small venture funds. But it was like, I was like a CFO and, keeping track of everything, doing the accounting, like managing the firm that was doing that. AngelList just take care of all of that for small investors. But I would say for people who are thinking about angel investing, again, not professional financial advice, but do it with money that you're very comfortable losing all of it. If you've never done this before, view it like going to a casino. But the thing that I think is different now versus 10 years ago is access, right? Like the best super angels of 10 years ago, and people who ended up becoming fund managers, Mike Maples, that whole crew, Steve Anderson and Baseline, they had access, right? Or Chris Sacca. They had access because they had worked at Google or they worked somewhere and they knew people who were starting companies in a specific network and they pounded the pavement here on the streets in San Francisco to meet people. Now, roughly how many subscribers do you have to Software Daily?
I would guess 250,000.
Right. And some large percentage of those folks are starting companies, right? Right. We're same order of magnitude it acquired. Like, yeah. I didn't work at Google, but we can have that access.
Totally.
And so I think anybody who's thinking about doing this, like, ask yourself that question: do I have access? If I don't, but I really want to do this, what can I do to get access? Maybe that means go work at Stripe, or maybe that means do something else. Like, there's so many more avenues now.
Is Stripe the next Amazon?
Oh, that's a good question. Okay, I want your thoughts on this. I think you're going to be closer to it than me. I thought for many months, years, I was like, oh, gosh, if there were one private company I could get into, I wish it was Stripe. It just seems so inevitable to me. But then I feel like something happened in the last few months where literally every single person in tech, every venture investor, every angel investor, everybody buying secondaries was like, I will buy Stripe at any price. And that just made me like,
Oh yeah.
that made me pause for a minute. So I would never bet against Stripe. But I see people buying at these crazy valuations, and like Braintree is still as big or bigger. So I don't know. What do you think?
So I felt this way. I did an interview with Patrick McKenzie. Like, do you know who Patrick McKenzie is?
I know the name, but I don't know.
He's like this. He's been writing about small internet businesses for many years, and he got an email from Patrick Collison one day who was like, "Come work at Stripe," and he's like, "I'm an entrepreneur. I don't go work for somebody." And Patrick Collison was able to convince him to come to Stripe.
The Cortland Allen story.
Well, I mean, the Cortland Allen story was an acquisition. Like,
Yeah.
Cortland didn't have a way to like make money from indie hackers.
I
Cortland was
see.
calling
Patrick-
me. Cortland was calling me saying, "How do I sell podcast
Yeah,
ads?"
right.
And I was like, "Oh, okay. Here's what
He
you do."
brought you up when we had him on for a special on Inquired, and he brought you up as like exactly that. He was calling you to say, "How do I sell ads?"
I was like, "Sell podcast ads," and he started selling podcast ads. He's like, "This sucks." I was like, "Yeah, it does suck, but you get to make money." But then he went a much better direction. Just getting an email from Patrick Collison to get acquired.
Yeah.
But
So Patrick actually went to work at Stripe.
Patrick McKenzie, yes, actually went to work at Stripe because he had started and sold, I believe, 2 different internet businesses. One
Okay.
was like a bingo card creator company. One was an appointment reminder company.
Oh, man.
It was like
Indie hackers.
Indie hackers before
Yeah.
there was indie hackers, and he wrote about it a ton. So he's like the perfect person to go work at Stripe. And he went to work at Stripe. I think his first project, or very quickly after he joined, was Stripe Atlas. And so I did a show about Stripe Atlas. And that was what convinced me that Stripe was the next Amazon, because Stripe Atlas is one of, when I saw Stripe Atlas, I was like, okay, there's their AWS.
Yeah. It's gonna drive so much more company creation.
Right.
Yep.
100%. They are unimpeachable in so many ways. Like they have the best culture for as far as a company of their size. They have the most charismatic founders. They have
Far and away the best brand.
far and away the best brand, fewest syllables of a brand.
Stuff matters.
I guess Lyft has 1 syllable.
Well, you did a rebrand here. The
I did a
name
rebrand.
matters.
Yes. You want to cut as many syllables away as possible. Yeah, I mean, I didn't know Braintree was bigger. Still.
Now the argument, the counter argument of Braintree is still like as big or bigger. I don't know exactly. The counter argument is it's like the growth rates are completely mismatched. Like Braintree is growing, but it's all older legacy. All the new companies are on Stripe, and so if you believe the internet's going to grow and traditional payments on the internet are going to grow, like you should be long Stripe.
Yeah.
I believe all that. The only thing that gives me pause is just that like I feel like there is not a single Stripe bear left on the planet. I'm not a Stripe bear,
Right.
but I'm just like, okay, what's going on here?
People have gotten better at valuing technology companies, right?
That's true. And what's the current rumored valuation on Stripe?
95 billion, I think.
95 billion. Yeah, and I think secondaries are happening above that. But like, could it get an order of magnitude bigger than that still? Sure.
Yeah, sure.
Sure, for sure. Yeah, okay.
So, yeah.
All right, maybe I should just try and buy some secondaries.
Have you bought secondaries before?
I have as part of venture firms, but not personally.
Okay. Yeah, me neither.
Yeah.
That's something I'd like to be able to do. I think
Yeah.
Carta X is going to do that.
Yeah. I've been waiting for, there's so many platforms. There's Equidate. There's lots of them out there. They always just seem a little sketchy to me.
Right.
But like the biggest reason being that it's going behind the backs of the companies. And so the companies find out if they don't like what's going on, they could just cancel the equity.
Oh, really?
It's within their rights to do so. Now, they're not going to do so because could you imagine the PR crisis of like, Stripe cancels employees' equity? Like, it's not worth the.
So is it like employees who are ready to sell? They go to what was it, Equidate?
There's Equidate. There's Shares Post.
Right.
There've been a bunch of them over the years, and by and large, so there's 2 ways to do secondaries right now. I think Cardex wants to make this better, but until now, there've been 2 ways. One is the above board company sponsored way. So this is like what SpaceX does. You do regular secondary tender offers essentially to shareholders, either the employee base or existing investors. That could either be as part of a round that the company's raising, or it could be, I think SpaceX just does regularly scheduled tender offers. That's great. To participate in those, though, you need to be invited by the company into the tender offer process. So, like, I guess I could email Patrick at stripe.com and be like, hey, I'd like to participate in your next tender offer, but I don't think he's going to get back to me. Then there's been that dates the share post and whatnot, and that's the sketchy, quote unquote sketchy, but that's mostly employees, who decide they want to get liquidity, going around the company's back and saying, and basically you there are all sorts of different ways you can structure it, but creating legal agreements such that, like, hey, you're not going to get custody of these shares right now. When there is an IPO or liquidity, whatever happens, that I can trade these shares, you're going to get them at X price, and we'll change money now, and you can collateralize this with debt or all sorts of stuff. Anyway, that just seemed like not worth playing into me. But if there are going to be more open markets in the future that are company sanctioned, and well, then yeah, that sounds very interesting. That sounds like crypto to me.
Yeah. I mean, there should be, right? Like, why wouldn't that happen?
Yeah. I mean, the argument against it in the past has been companies don't want their shares, private company trading around in lots of people's hands. They don't know their shareholders. Retention for employees. You don't want people join, they hit their first vesting cliff, and then they sell. But I just think a lot of that's either been blown up or going to get blown up by crypto now. Like, if you're trying to attract employees to go work at a traditional company and you're going to pay them in equity, and that's going to be the upside, and they're evaluating going to work there for you or going and joining a DeFi project, like, and the DeFi project, they're going to get paid in tokens, and that's going to be fully liquid from the instant it hits their wallet. I just think you're going to have to attract employees if you're going to compete with that market. And I'm curious of what you're seeing on the pod, or your friends, or people you angel invest. All the talent, especially the young talent, number one destination I see these days is going into crypto and DeFi.
Oh yeah. Oh, it's almost like a filter.
Yeah.
It's like a filter for how ambitious the people are.
People are.
The weirdest, most ambitious people are pursuing crypto. I mean, there's some people doing infrastructure projects, or they have some cool idea for consumer internet. But I would say, by and large, if they don't know if they don't know what to do, they certainly gravitate towards crypto.
Yeah, totally. What's going on in software these days? Like, what should I be paying attention to?
So you got a few things going on. Crypto, obviously. Data engineering. Do you know anything about data engineering?
Well, I know it exists.
Yeah. So data engineering, when I started the podcast, the predominant thing you had going on was a lot of companies were figuring out how to deploy Hadoop. Hadoop was this thing that came out of the MapReduce paper from Google.
Yep.
And
Cloudera,
Hortonworks, MapR all started from the Hadoop revolution, and the Hadoop revolution really consists of two things. It consists of Hadoop MapReduce and the Hadoop distributed file system, which today has matured. If you think about those two areas of storage and compute, have matured into, you have a very big set of companies doing interesting stuff with compute, and a bunch of companies doing interesting stuff on storage, and then everything in between. You can think of Snowflake as a kind of a downstream, result of
HDFS.
Yeah, sort of. I mean, Snowflake is a data warehouse company. When I was starting the podcast, the predominant view, I think, was that the way that things were going to go was that people were going to store all their data in HDFS, what is now known as a data lake.
Yep.
And it's like this really cheap storage, and then you do interesting stuff with all your data that's stored in the cheap storage. You load it into you either run Hadoop jobs, or you have these stream processing systems like you have Spark, you have Flink, you have Apache Beam. These processing systems, you would have these. Basically, you have your low cost storage, and then you have your processing system. And what's happened, which is interesting, is that those things did happen. Like, Spark is a huge business, obviously, with Databricks. Spark was kind of the winner in the next generation data processing framework space. But you had the rise of the data warehouse, which was unexpected. And what's interesting about data warehouses is you basically throw all your data in the data warehouse, and I think what Snowflake does, I've never used Snowflake, but I think what Snowflake does, and I think what Google BigQuery does, is it puts it into a tiered storage system. So so some of it is at slower access speed, some of it's at faster access speed, and then you can tier it into memory, so it's like much faster. And so everybody is just using data warehouses because data warehouses they basically take care of all the lower level plumbing that you would want out of your data infrastructure. So instead of having to run like an HDFS and having to run like all this data infrastructure, you basically put everything into Snowflake. This is what made Snowflake such a popular company, I think. Like, people were originally doing this with Amazon Redshift.
I was going to ask, like, this sounds like Redshift to me, but yeah.
Yeah, so I mean, Redshift did that, but then, Snowflake, presaging kind of a whole generation of companies that are not Amazon Web Services, but provide you great infrastructure, said we're gonna build an entire company around what Amazon tried to build a single service around, and that's what they've done. And there's going to be a whole generation of companies that use Snowflake as a platform, I believe. Whether it's you explicitly plug into your Snowflake or you use or they just use Snowflake under the hood because it's such a powerful system.
That's awesome.
Yeah. So I mean, I'm like, not financial advice, but Snowflake, not a bad bet, I don't think.
Well, Berkshire Hathaway agreed.
Did they put money into Snowflake?
Yeah, I think it was Todd bought into the IPO in a pre-IPO round. Put $500 million into the Snowflake's pre-IPO. Yeah.
Seems like a safe bet. Could be the next Oracle.
Yeah.
Scaling a SQL cluster has historically been a difficult task. CockroachDB makes scaling your relational database much easier. CockroachDB is a distributed SQL database that makes it simple to build resilient, scalable applications quickly. CockroachDB is Postgres compatible, giving the same familiar SQL interface that database developers have used for years. But unlike older databases, scaling with CockroachDB is handled within the database itself, so you don't need to manage shards from your client application. And because the data is distributed, you won't lose data if a machine or data center goes down. CockroachDB is resilient and adaptable to any environment. You can host it on-prem, you can run it in a hybrid cloud, and you can even deploy it across multiple clouds. Some of the world's largest banks and massive online retailers and popular gaming platforms and developers from companies of all sizes trust CockroachDB with their most critical data. Sign up for a free 30-day trial and get a free t-shirt at cockroachlabs.com/sedaily. Thanks to Cockroach Labs for being a sponsor, and nice work with CockroachDB.
Are you building cloud applications with a distributed team? Check out Teleport, an open-source identity-aware access proxy for cloud resources. Teleport provides secure access to anything running somewhere behind NAT. SSH servers, Kubernetes clusters, internal web apps, and databases, Teleport gives engineers superpowers. Get access to everything via single sign-on with multi-factor. List and see all SSH servers, Kubernetes clusters, or databases available to you. Get instant access to them, all using the tools you already have. Teleport ensures best security practices like role-based access, preventing data exfiltration, providing visibility, and ensuring compliance. Best of all, Teleport doesn't get in the way. Download Teleport at softwareengineeringdaily.com/teleport. That's softwareengineeringdaily.com/teleport.
I've got a question. If this is bring it back. Everything comes back to crypto, at least on this episode. My very, very rough, not fully yet adequately informed thesis on things like Solana in the crypto world is the analogy I'm thinking about is like AWS and Snowflake. They're like Ethereum is AWS for crypto, basically. But there's going to be all sorts of specific use cases where different protocols are going to do better, and projects will use both Ethereum and those. Like, I think anybody who's using AWS or using Snowflake is probably also using AWS for various workloads and storage and stuff.
Sure.
It seems to me, I don't understand why crypto wouldn't be the same with protocols.
Yeah, that's what I've heard. There are like you have this fundamental trade-off of security and cost. Like
Yep.
the more secure it's going to be, the more expensive it's going to be. So and by secure, well, okay, I don't know if security is the word, but decentralized.
Yeah.
The more decentralized it is, the more expensive it's going to be.
The more, I don't know, maybe canonical? I don't know, whatever you want to do. Yeah.
Yeah. Exactly. So if you so I mean I'm not the best person to ask about this, but I think that's right. I think that's why there's so many chains. I mean, I always used to ask the question like to the Ethereum people, why can't you do this with Bitcoin side chains? Because Bitcoin has this like low level language, and I was always just like, well, shouldn't you be able to take the low level Bitcoin language? And I think it's Turing complete. Like,
Yep.
you don't need much to have a Turing complete language.
Yep.
So why can't you just take the Turing complete language and then build, I think, a sidechain is what it's called.
Yep.
And make basically a version like, you just build your Turing complete programming stuff on top of Bitcoin. And I would always get the answer that's just like, Bitcoin's just not built for that. Like it's just you could do that, but why would you? Like
Right.
Ethereum is made for that.
Right.
And so I think that extends into, as you're saying, basically, you have domain specific blockchains. You want that.
Yep. We'll see. It's all so early. Like
It's really early.
It's so early. What engineering techniques and programming languages are being used in crypto mostly?
I think Ethereum uses Solidity,
Right.
which is kind of like JavaScript. I've heard it's pretty easy to learn.
Would you be a Solidity developer outside of crypto? Like, is that like a big language or a big skill set that people have, or
Solidity was invented for Ethereum.
Okay.
Yeah. I think that most of the other blockchains are actually, I'm not 100% sure about this, but I think they use Solidity, or they use, I'm probably going to get this wrong, but or they use or they use like an EVM compatible solution. So like the Ethereum virtual machine. So they basically run. It's like you're running on Ethereum, but the way that the consensus works under the hood is different.
I think I heard that some projects and chains are using Rust. Maybe
That wouldn't
Solana
surprise
is.
me.
And that part of the appeal there is like, hey, you don't have to learn Solidity. We can access a whole big pool of developers. But it's fascinating how like it's so easy for me to forget as like thinking about business models and the investing layer of the stack. When you come back to crypto, it is something an area of technology that's still so new.
Oh yeah,
the technical decisions matter a lot.
Oh yeah, and by the way, like so speaking of like the whole fractal nature of what we're doing, roughly the first 3 to 4 years of Software Engineering Daily, I felt like I could basically cover everything important in the world of software engineering. Like I could get, I am skin deep understanding in all of these areas, but I have a skin deep understanding. You ask me about JavaScript, I'll give you a skin deep understanding. You ask me about crypto, I'll give you a skin deep understanding. You ask me about data infrastructure, I'll give you a skin deep understanding. But crypto has become so complicated.
Yeah.
I can't even give you really a skin deep understanding. Like
Yeah.
I see the projects, I always go to like the websites of the crypto firms, and I look at what they're investing in, and then I look at the
white papers,
the white paper, or even just the website, and I'm like, what is this? What the hell is this?
Well, the challenge is 80% of it. It's nothing.
That may or may not be true, actually.
Right, but it's hard to distinguish.
Like, if you talk to crypto investors, they will give you justification. They'll be like, oh, yeah, it's a ZK snark thing. Like, what? Like, I'm not fluent in it anymore.
Yeah.
And there are podcasters that are definitely doing a better job. Like the Bankless. Have you heard the Bankless?
Yeah,
podcast?
Bankless. That's a great podcast.
Yeah, Bankless is. I think they're like acquired for crypto, basically.
Oh, what a compliment.
Yeah.
The other one I like is Uncommon Core.
I haven't listened to that.
They also
Is that
also
the
really good.
Three Arrows Capital guy?
It might be one of the two co-hosts is an investor, I think.
Sue.
Yes.
Okay.
Yes.
Yeah.
Yeah, they do a good job. But yeah, it's also new. Like, it's crazy. So when are you going to start minting NFTs of episodes?
We should. I have an idea about that offline. But
Cool.
but on all seriousness, I don't know. I thought about it. Have you tried to do it?
Yeah, we have not tried. Of course, it's crossed our minds. We have friends and collaborators who have done stuff like that. I don't know. It feels weird. Like, well, you know what it is? I wonder if it's an innovator's dilemma type thing where we're probably not going to do it.
Yeah.
Because we've got an established revenue model with sponsorships. But if we were starting from scratch and we had no sponsorships, but we had an audience, why not? Why wouldn't we try it?
The question is like fundamental. I mean, it's like, what's the difference between that and subscription? Like, is it really anything? I mean, are you gonna hang the episode on your wall? Like, I kind of get it. I kind of get it with the GIFs or with like the JPEGs.
Yeah.
But the audio thing is weird. Like, you welcome somebody into your mansion and you say, okay, and before we sit down to dinner, I'd like you to walk into this soundproof room and we're going to listen to the acquired episode that I have the rights to.
Oh, amazing.
This is my listening room.
Yeah.
This is where you listen to my NFTs.
Well, okay, so the one thing I have been thinking about that, again, we're not going to do anytime soon, but I think would be something we would do is if you take the rights aspect of it seriously, are there people or organizations out there who might want to, say, either commission an episode of Software Daily or Acquired, or buy one, but then to have the rights to publish it wherever they want. So, like, we were imagining for Acquired, like, say you're a company that for whatever reason you would like to have an Acquired episode on your company. You might use that for recruiting. You might use it for fundraising.
Sure.
You might use it for whatever you want.
Yeah.
And you might want to publish it on your website. You might want to keep parts of it internal. You might want to use it for employee morale. Like, who knows?
Yeah.
If there were a marketplace to be able to do that, like, there's certainly some price at which Ben and I would go do a private Acquired episode for somebody. And then if we did that, we'd be happy to give them the rights and like have them use it wherever they want. Would an NFT make something like that possible?
I mean, it's possible without an NFT, right?
Right. That's what we came back to,
Like,
which was like, as we were
'cause
talking about.
like, they're never going to resell that, right? Like, they're never going to go to Christie's.
Right.
Or, yeah.
I don't know. People do things like maybe they would, but
Yeah, maybe. I mean,
that is what
like-
we came back to. We were like, as we were talking about it, we were like, wait a minute, wouldn't that just be a regular commissioned episode?
Unless you think it's going to be like you're the Andy Warhol of business podcasts, and even your advertising is going to get sold for millions of dollars
Oh my
in the
God.
future, then
That would be amazing.
probably not worth it.
Our egos haven't hit that point yet.
Yeah, I think Joe Rogan NFTs would make sense, or Dan Carlin.
Yeah. Or, also, I think it could make sense too for like, there's so many niches and creators out there that are not in obviously monetizable niches. Like, we are in excellently monetizable niches. But if you're make up something like, even let's take true crime is a really popular, I think it's the most popular podcast category.
I bet.
True crime podcasts. The only way I can think of that you're going to monetize that is just through, Casper ads. Like, you're just going to do mass market type stuff. But they probably have really passionate audiences. This is the whole theory behind Patreon and the like, is monetized directly. But maybe an NFT is a way to monetize directly, but just monetize the whales and let that subsidize
Right.
everybody else.
Instead of Patreon.
Right, or do both, right? Like, anybody who wants to pay $5 a month, great, pay $5 a month. But if somebody wants to pay, if somebody is really rich and really loves us and wants to pay us $1 million, okay, there should be a vehicle for that.
Yeah. Yeah, I mean, it is ultimately patronage.
Yeah, it is. Or at least NFTs as they've blown up so far.
I wonder what's going to become of all this young wealth, like the young wealth of crypto, like
the FTX guy.
The FTX guy, or like I heard an interview with Medicoven, the guy who bought the Beeple, the guy who bought the $72 million Beeple. He's like younger than us.
Oh, wow.
He's like 31 or something.
Wow, we're the old guard now. I love it.
We're definitely the old guard. But yeah, I mean, he's just like an art connoisseur. He's like Beeple's first 1,000 days or whatever it is, like that is an iconic piece. I needed to be a part of it. I'm a total true believer.
Yeah.
And I was just thinking, like, this is such a sign of there is a nouveau riche.
Yeah.
There is a nouveau riche in the world. Like the crypto. And I was hearing about this in Miami too. My friend was telling me, he's like, yeah, you know, I went to this party with a bunch of crypto millionaires the other night. It made me feel so stupid and so poor.
It is interesting though. Like there is all of this wealth being created, and there's definitely going to be new culture that's going to emerge around it. Like this has always happened in history. Like anytime, it used to be the founding of nations, right? Like America becomes a thing, and then like people get rich in America because there's opportunity, and then the old world, looks down on like, wow, those nouveau riche Americans, and then people were doing this with China after Deng Xiaoping opened it, and there were, people were getting rich in China, like, oh my God, Chinese people are buying, what was the thing they would buy, like wine at auction and then blend it together, and like, can you believe that they're doing that? Like, of course that was not all Chinese people. It was just like there were news reports about that. Like, anyway, but yeah, this is like, yeah. So it feels like now we're the guys on the porch being like, can you believe that they're buying NFTs with all this money?
Yeah, and you just feel like a sucker, like making an honest living,
selling sponsorships on the pods.
Yeah, exactly.
It is great. I really like our business model. I don't know about you. Like,
yeah, I mean,
it's so aligned.
Yeah, it works. It's a hard-earned platform. I think we were lucky to start, before it got really crowded.
Yep.
And I mean, I don't know about you. Like, did you know it was gonna get? I mean, it's so weird because it's one of those things. It looks so obvious in retrospect. Like, obviously this is
no freaking idea.
This is too easy.
Yeah,
it's too easy to do.
Yeah, no clue. Complete dumb luck that we ended up doing this. It was more like Ben and I enjoyed chatting. We thought it would be fun to do this. We were like, oh, podcasts are cool. Like, let's do a podcast. But no strategy, no play. We didn't see it becoming this big. How about you?
No. I mean, the only indication was that the reason I left my job at Amazon to do it is because there's another podcast called Software Engineering Radio. It's actually has a bigger listenership than my podcast. They started like 10 years before.
They're the Braintree and you're the Stripe.
I wouldn't say that. I don't know about that. Was Braintree around when Stripe started?
Yeah, Braintree was, so it's part of PayPal now. Braintree was a startup that I believe was started before Stripe. Although Stripe was started in 2009. It was a long time ago.
Yeah.
I think Braintree was started before. Yeah, they were like 07, maybe I want to say. And then Braintree acquired Venmo. This is like the craziest quirk of history.
Braintree acquired Venmo. It wasn't PayPal. Yeah. It was before.
And then PayPal acquired Braintree.
Right.
Yeah, so what happened was, like, the story as I understand it, we had Andrew Cortino, one of the co-founders of Venmo, on for a live show.
Oh.
Unfortunately, the audio got messed up, so it wasn't one of our best works. But if you want the whole story and you're willing to listen to bad audio, go back and listen to that from a few years ago. But so I think the story is Accel was the main VC in both Venmo and Braintree. And Venmo was taking off, getting all this usage, but they had no business model, and they were just like bleeding cash because there was no revenue, and they were getting hit with ACH fees from the banks. So as it grew, just like they lost more and more money, and they needed a save. Like they needed something to. Obviously, there was value there, but they needed something to do with it because the company was running out of money. So they called up Braintree, their other portfolio company, like, you guys are financial on the internet. Like, can you bail us out here? And then PayPal ended up acquiring the whole thing like a few months later.
I remember going to a Venmo party when I was in college. It was like in 2013 or 2012 or 2011. It was just like downtown Austin, probably during South by Southwest.
Probably,
and it was just like, hey, there's this company called Venmo that's like hosting free drinks and food. Like let's go. And all you have to do is download Venmo. And I remember downloading it, and I was like, what is this?
Remember those days? I mean, we were all so innocent.
We were so innocent.
Dude, it must have been awesome being at UT during South by.
So actually, I barely went to South by. I mean, I'm the worst Austinite ever. Like, I'm the worst representative of Austin because I never went to. I've been to very few live music. Been to one ACL. I never went to South by Southwest events. You know, I was, you know, I was not a big attendee. So
Now though, you can go back and.
now I go back and I don't know. Austin is still an extrapolation of what it was in college. It's still not. I mean,
it's always going to be that moment in your life for you, or like.
Well, okay, no. So as far as a tech scene, like the thing I always used to say about Austin, and I don't think this is true anymore. But and it maybe was never true to an extent. But I do not want to offend any Austinites out there because I absolutely love Austin. But relative to like San Francisco or like, you know, in terms of a tech scene, I always used to say Austin is where young people go to retire.
Yeah.
It's really offensive.
No.
I
get
don't
it.
think I mean
I
it
get it.
anymore. But just like the work culture
Yeah.
there was laid back, and if you want a laid back work culture, like Austin's a fantastic place.
Yeah.
Again, I don't think this is even true anymore.
Yeah,
I think
well,
now it's
Seattle
more,
had this reputation for a long time too. It absolutely did. Like, especially after, not during the Microsoft's heyday, but after the DOJ handicapped Microsoft and like they went through their decade-long fallow period. Yeah, this was absolutely like, oh, like you see people move from San Francisco to Seattle. It's like, okay, yeah, they made a bunch of money. They want to get the no state income tax.
Yeah.
They're there to chill.
Yeah.
Like, definitely not the case anymore.
No.
But that was a knock for a long time. So yeah, I get it. And the lifestyle's great, like in both places.
it is.
And
it is.
It's okay. Do you think it's going to be? Well, we'll get to the question in a sec. Do you think it's going to be different after COVID? But I think they're absolutely. I felt one of the reasons that I moved here in 2017 was if you really wanted to be the best and you really wanted to hustle, like, and you worked in our industry, you had to come to San Francisco.
Yeah, it's exactly.
You know,
right.
you could justify being other, but you were just justifying like this is where it all was. What do you think now? What do you think going forward?
Yeah, moving target for me.
Yeah.
I mean, like COVID was like a mesmerizing experience, right? And like once when you're in COVID, it feels like it's never going to end.
Yeah.
Now it's starting to feel like it is actually ending. You can go to dinner.
We can
and
do stuff like this,
we
which
can
is
do stuff
amazing.
like this, which is amazing, and only possible because we're in person. We're still
Yeah.
here, and I like that.
Yeah.
And not everybody's left San Francisco. Maybe the loudest people on the internet. If you go on Twitter, it feels like everybody's left San Francisco. I'm not sure if everybody's left San Francisco.
Yeah, I don't think so. I know a lot of people who are still here.
The question is like a lot of what was cool about San Francisco for me used to be like everybody comes to town, even the people that live in the South Bay.
Yeah.
Periodically, like once a week at least, you know, everybody from South Bay is coming to the city. So if you want to schedule a meeting with somebody from the South Bay, you can just wait and they'll come to the city.
Yep.
Or you'll be going to South Bay and you can meet them in South Bay. My big worry with COVID was like nobody's gonna move around anymore. Everybody's just
Right.
gonna be sitting in their home. I don't know. I mean, it's at the same time, San Francisco still feels like a dilapidated ghost town right now.
Yeah.
So it's like you're walking.
And Lord knows there are huge problems here. Like
really big problems.
really big problems.
That have sort of, I don't know, it's like COVID really unveiled them in a way that wasn't as resonant before.
Yeah.
I mean, you're a runner. Did you used to run around San Francisco, or do you still run around
Yeah,
San Francisco?
used to and still do, although I'm not in as great shape as I was pre-COVID. But I love running around all the Bay Area. That's one of the best parts about the Bay Area to me is in the city, in the South Bay, in Marin, in the East Bay. You can go for runs that are just world class.
And it's
Like,
not a bummer at this point. You still feel
I mean, I
fine?
miss doing it with people, but
Right.
but no.
Okay. Well, I used to run around downtown,
Oh.
and like I would run down Market Street,
Ooh.
and
Ugh.
that's become really gnarly.
Yeah.
I mean, it was always gnarly, but it's become more gnarly. I guess I just have to change my routes.
Oh no, I do like Bernal and Glen Canyon. Like,
Okay. All right. I guess that stuff hasn't changed.
Yeah, no, those parts of the city. We live in Noe, and like it hasn't really changed. It hasn't changed at all. But that's not. I think part of the appeal of Noe is that like, and Glen Park and Bernal is like, it feels like you're living in Palo Alto, but you're living in San Francisco.
Right.
There was an appeal. Maybe this is what you're saying to like, no, I'm living in like downtown San Francisco.
Yeah.
And like, yeah. Is that
still
not?
That's where I've lived. It used to feel safer than it feels now. It used to feel like
it probably used to feel like like I'm in the middle of the universe. Like this is like amazing.
Yeah. But it was hustling and bustling. But now it's like Van Ness is like under construction forever, and it's under construction.
I think it'll depend on like what do the big companies do? Like what does Stripe do? Aren't they
like leaving their headquarters that they just built?
Yeah, they built that new headquarters, and then they now have space in South San Francisco. I think,
I think it's impossible to predict at this point. To be honest, like I've heard mixed reviews. Like I was just talking to a CEO who said they polled the office at the beginning of the pandemic and said like, do you want a physical office to go back to? And it used to be like 70% said yes, and now it's only like 30% or 20%.
Interesting.
But we'll see what actually happens. Then you have Amazon saying people have to go back to work in the office.
Yeah.
I think Google's saying the same thing, or they've backpedaled a little bit.
Yeah.
I'm sure the management of these companies, the executive management would love to have people still coming back to the HQ to work because you get so much more out of your employees if you can enforce that. But we may have gone through a one-way door.
A one-way door, yeah.
About
I don't know how it's gonna play out. It's gonna be
like I would never go back to an office. I could
me
never
neither.
work
Yeah,
in an office at this
totally.
point. Like
never.
You used to drive to the office in Madrona, right? Like
oh yeah, it was well also just like our careers and what we do is just so not I sound like a broken record, I'm sure, but like just like our careers are on the internet. Like there's no reason to I love you know what my dream is that I would love to realize in the next few years. I think the question we're wrestling with on this is like, how long do we stay in the city or do we move to the suburbs? My wife's family's from Marin, her family's all in Marin, and Marin's such a great place. We'll probably do that at some point. But my dream is I would love to have like a house and then in the backyard, a studio. Like actually my very specific role model is Michael Lewis and his family. It's just amazing. They live in Berkeley. They've got a compound with, I think they have 4 properties on the compound. So there's like the main house, and then he and his wife each have a cottage studio.
Oh, wow.
His wife's Tabitha Soren, who was the MTV VJ, and now she's an artist. So she has a studio artist, and he has his like writing, and then they have like a guest cottage. And that sounds amazing to me.
That sounds pretty cool.
Yeah, you get the separate physical spaces. Like you have your office.
Does he do his podcast out of there?
Or
just he does writing there?
I think, I know he does writing. I don't know where he records the pod.
Okay.
But that just seems like the dream to me.
For sure.
Like the commute is I walk across the yard.
Right.
And then I'm in a separate space, which is like set up for the work I do. And then at the end of the day, like I walk back into my house. That sounds amazing.
I mean, the question there is like, you don't want to be living the COVID life for the rest of your life, right? Like you want socialization, and I assume you don't want it to be relegated to like conferences. So are you going to synagogue? Like what are you doing?
Well, I
was thinking about this during COVID. I was like, am I going to have to start going to synagogue? Because I can't live this way.
Amazing. COVID was great for Judaism. So this is why I think Michael Lewis has it figured out. When he talks about this, they moved to Berkeley. I don't know where Tabitha's from. He's from New Orleans. They moved to Berkeley because they went through the process and they were like, where can we live and have the lifestyle we want, but also have access within driving distance to the best stories that he could write about in the world? And they're like, Berkeley is great. So like you can have that lifestyle, but you're in the Bay Area. You can go across the bridge to San Francisco. You can go to the South Bay. So I think that's like.
So he just meets with people.
Yeah. I think if you live in the Bay Area, my hope is you can still get the best of all worlds.
If you're Michael Lewis, you get invited to dinner parties and stuff, and that's your socialization.
Right. I don't think it's hard from Berkeley. I got plenty of friends that live in the East Bay.
Yeah.
I don't think it's hard to drive across the bridge, hang out, do whatever.
I mean, I guess this is what I'm realizing. Like during COVID, I started to feel like I didn't have any friends. I was like, I don't have any friends. I'm not hanging out with anybody. But it's like my brain didn't realize it was because it's a pandemic. Like, that's why I'm not hanging out with anybody. It, like, some lower level part of my brain felt like I was being ostracized, and like I didn't have any friends, and like this was how it was going to be for the rest of my life. But like, we're starting to come out of it now. I'm starting to realize, like, we're hanging out. Like, I hung out with a few other people last couple weeks. I'm like, no, what, I have friends.
Yeah.
Like, I can socialize.
Yeah, totally. Man, did you do profanity on
I know what you're gonna say. Go ahead and say it. It's fine.
What a mind fuck, man. Like, I always ask, like, because we try to not do profanity on Acquired, but if we have a guest who does, we're like, fine, But anyway, yeah, what a mind fuck.
I think it's well deserved. Even children listening to this should know.
Yeah,
should know that was what COVID was.
You know what's gonna be crazy is like all the kids. Well, actually, my wife and I are expecting a daughter in October. We're very excited.
Congrats.
She's gonna have no idea. Like, she was like conceived, and Jenny has been pregnant during this thing. She's gonna have no idea. I mean, that's great. I'm so happy for her. But like,
so is this this is a Great Depression level event, right, for our lives?
I think so. Hopefully not with as well different types of suffering, but I think so, right? Like,
but does it have? Is there an equivalent? Like the whole, people who live through the Depression can't. Like, they can't spend money.
Yeah. Oh, yeah.
Like,
what are our neuroses going to be?
Is there some neurosis? Yeah, neurosis.
I mean, it definitely feels to me, I don't know about you, but like, I used to think 9/11 was this in our lives, but the pandemic feels like infinitely bigger than 9/11.
Yeah.
Yeah. What are we going to be worried about? I wonder if maybe we'll worry that like something like this is going to happen again, even though, yeah, it may or may not, but like we're probably going to be better equipped to deal with it when it does. I don't know. What do you think?
I think I'll be more cautious. I mean, so it's like Black Swan, like Black Swan, like absolutely Black Swan. That even 9/11 for me was basically in the distance. Like, it didn't really affect me at a visceral level.
Yep.
But yeah, Black Swan.
Yeah. I mean, no doubt it affected everybody. Congrats on this studio setup you've got. This is great.
Yeah, I mean, thanks to Pyramind, that's where we're recording. Hopefully someday I'll have my own thing.
Your backyard studio.
Yeah. I would like to have
you could get if you ever did go back to Austin, you could have a pretty sick setup there.
Definitely. I'll never go back to Austin.
Too hot, the culture.
I spent 23 years of my life there. I don't know. I think it's. I mean, unless it changes enough, I want to. I mean, maybe I'll mature and I'll change my mind. But I think I'm a big city guy.
Yeah, that makes sense. It's hard to like. Yeah, I can't imagine myself going back to where I grew up.
Why is that? Psychological issues?
I think it's mostly I grew up in a fairly small town in Pennsylvania. Not like super small, but like it's just very different than San Francisco. But I think also just psychologically, like every time I go back there, I'm just flooded with all this like who I was in middle school and high school.
If I'm being honest, that's what it is.
Yeah.
I need to escape that for good. I'm done with that person.
Yeah, you just like you don't want to be that person anymore.
No. Cool. Okay.
All right,
well,
let's
wrap it.
Great spot to end on.
Yep.
This is a blast.
Was a blast.